Can a nation with a history as rich and diverse as India's not only overcome its challenges, but also pave a path to global prominence, defying expectations with a population that has now surpassed even that of China? In a striking twist, India claims the title of the world's most populous nation at 1.43 billion. Amid this achievement, the nation confronts its infrastructure limitations, sparking a dawn of change. Witness progress as highways unite lives, Mumbai's airport expands horizons, and essential resources receive renewed focus. Explore India's economic journey, a phoenix of prosperity forged through strategic moves in the crucible of adversity. As if breaking free from the shackles of the past, India's reforms are dismantling bureaucratic barriers, clearing the path for investors and companies to embrace new opportunities. Join us on a voyage into India's narrative of resilience and destiny. India's economy, once ranked 10th, has soared to the world's 5th largest, a testament to the nation's resilience and determination. It is no wonder that seasoned investors like Laura Goritz of the Rondier New World Fund see India as a beacon of growth and opportunity. However, the question now is whether India can turn what Prime Minister Narendra Modi describes as India's decade into sustainable progress. For all the recent advances on a national level, companies still get bogged down in red tape on a local level. And while the middle class is growing rapidly and digitization has connected vast swaths of the population to banking, millions are left behind in poverty, with progress on the education front stalling in recent decades. India, a natural beneficiary of shifting tides, stands at the threshold of a new era, as its northern neighbour and rival China faces struggles and uncertainties. India emerges as a beacon of hope and opportunity. The escalating tensions between the United States and China, intertwined with China's decelerating economic momentum, have cast a shadow over the path of growth. Projections by economists paint a subdued picture, anticipating a mere 4.5% expansion for China in the coming year, with even more somber outlooks of a mere 3% unfolding beyond the horizon of 2025. Amidst these dynamic shifts, a quest for stability propels investors and corporate leaders to explore new avenues. In this pursuit, India, poised for a projected 6.3% surge in the forthcoming year, shines as a rare beacon of promise. This fortune has initiated an ascent of India on the global economic stage, evident in the meteoric 12% surge of the MSCI India Index over the past year. It stands as a testament, outshining the modest 2% advance of the MSCI Emerging Markets Index. However, seasoned money managers see India's current run as merely the beginning of a grand journey that lies ahead. Its steady economic progress, fueled by strategic investments and reforms, has earned it the confidence of global investors. A parade of global companies announced India-related investments and pacts in June, coinciding with Modi's visit with US President Joe Biden. The two leaders vowed to deepen their countries' ties. They signed technology deals to help the US diversify away from China, and defense deals aimed at helping wean India from its reliance on Russia for military equipment. General Electric signed an agreement with an Indian aerospace company to make engines for the Indian Air Force's jet fighters. Micron Technology announced plans for a new test and assembly facility in India, and Boeing is investing $100 million to train pilots in India. Walmart, looking to expand its long history of sourcing items such as apparel and home goods from India, is targeting $10 billion in annual exports from the country by 2027. That will include toys, bicycles, and even seafood. Amazon.com's Amazon Web Services plans a $13 billion investment by 2030, and Apple has tripled its iPhone production there. Though India and China had similar per capita incomes in the 1980s, China zoomed ahead as it became the world's factory by building infrastructure at record pace and clearing the way for businesses. India, says veteran global investor Mark Mobius, head of Mobius Capital Partners, is better understood as the United States of India, with each state having different rules and priorities that contribute to the country's web of red tape that has made doing business in the country so difficult. It will take years to fully detangle the Indian bureaucracy, including freeing up more access to the country's scarce land required for building factories. India also still has nationalist policies, including tariffs on poultry and sugar that hinder free trade. Recent restrictions on freedom of speech and press have raised concerns, with India backsliding in some democratic gauges under Modi. Sweden's V-Dem Institute describes India as an electoral autocracy, in the same camp as Russia and Turkey. Asked about such concerns on his visit to the US, Modi responded, "Democracy is in our veins." People think politics and economics can be divorced. Arvind Subramanian, former chief economic advisor to India's government and currently a senior fellow at Brown University, if you centralize power and exercise state power capriciously against some and not others, eventually investors will also get worried. Even with those concerns, India looks poised to capitalize on its demographic dividend as home to nearly twice as many people than in all of Europe. As China's working age population shrinks, India is on track to see its pool of prospective workers swell to 1 billion over the next decade. It also boasts a median age of 28, a decade younger than China and the US. India's population bulge provides an unprecedented chance for economic development, for India to capitalize on it, and on the opportunity created by companies looking to diversify their supply chains beyond China. Chang says it will have to attract stronger foreign direct investment flows, as China did in the 1990s. Meanwhile, many of India's 28 states are vying for multinationals to invest within their borders, often offering land or other incentives in hopes of bringing in new jobs. India, in 2017, replaced a complex web of state and federal taxes that had fueled local protectionism and corruption with a single goods and services tax, speeding up commerce and increasing tax revenue. And there is finally evidence of upgrades to the country's dilapidated infrastructure. India has doubled its rural road network and number of airports since Modi took office in 2014, and recently touted the completion of 100 kilometers of road in 100 hours in the northern India state of Uttar Pradesh. The country aims to slash logistics costs from 16% of gross domestic product to 9% by the end of 2024. It even has a spacecraft on the way to the moon. "This is not the India I knew," says Rajiv Jain, GQG Partners chairman, who grew up in India. "Will it last forever? I don't know, but this government has improved the execution by orders of magnitude." Jain has almost a third of the asset managers' emerging market strategy invested in India. India has also facilitated the delivery of essential goods and services such as cooking oil and sanitation to a vast part of the population, and speedily digitized its economy, giving citizens identity cards and bank accounts. It also has created a platform for private companies to innovate, jumpstarting a technology boom that has already birthed 120 unicorns, private companies worth more than $1 billion in the past 5 years. As a group, the companies are valued at $350 billion. While China has taken a more interventionist role in the private sector, with harsh crackdowns on tech and other sectors, India is moving towards privatization of several major airports, toll roads and ports. Such moves help boost government coffers and revitalize assets sold with new investment, Jain says. Executives of global companies see opportunity in India, but are also clear about the challenges. Although India has rolled out new policies to woo foreign businesses, accessing programs and incentives continues to be a challenge, as is the relative scarcity of suppliers that can support large foreign companies, said Guru Bandekar, Carrier's global vice president of supply chain management, at a US Chamber of Commerce session on India in June. Another challenge, accessing raw materials to make goods. Often with suppliers in India, we have to bring in products from Southeast Asia to transform before we export it out, Bandekar says, adding that Carrier aims to triple its sourcing from India for its heating and air conditioning business over time. Walmart is investing in an ecosystem of potential suppliers, says Andrea Albright, Executive Vice President of Sourcing for the retailer. She tells Barron's that the situation has changed markedly in the past 10 to 15 years, as many suppliers have embraced technology and automation, increasing the ability to manufacture at speed and increase scale. We are just at the beginning and see tremendous potential if India continues to refine capability around exports, Albright says. Still, India isn't about to become the factory of the world, Sunil Asnani, founder and managing partner of First Principles Fund, sees India becoming a manufacturing power in areas that may not be as resource needy, such as making televisions, Apple and Samsung phones, and washing machines. Such products require less land, an important factor for a country that has more than 17% of the world's population, but just 2% of its land. At least for now, higher income and urban consumers are on spending sprees, fueling demand for sport utility vehicles, travel, and real estate, as people move from ancestral homes to cities and become more mobile. Lower income and rural consumers have been more constrained, evidenced in part by tepid sales of two-wheelers, which have yet to recover to pre-pandemic levels. There's a broader problem: education. India has long been a source of highly skilled, English-speaking talent for global companies, as a look at the leadership of US tech giants such as Microsoft and Google parent Alphabet illustrates. But Subramanian sees human capital as India's biggest failure, as education levels for much of the population have stagnated. Half of 5th graders read at a 2nd grade level, the same as 25 years ago. Those who have tried to draw parallels between China's burgeoning middle class and India's came up empty in the past, in part because those at the bottom of the income pyramid didn't have much opportunity, says Ajay Krishnan, manager of the Walsall Emerging India Fund. But that could change if India's manufacturing takes off. The next 10 years is going to look like China from 1991, with much more broad-based growth. With India's per capita income about 1/5 of China's and primed to grow, money managers see a longer runway for growth for companies that cater to consumers as India's standard of living improves. Once people hit middle income, consumption starts to spike, says Leon Edelman, manager of the JP Morgan Emerging Markets Equity Fund. India is very early in this stage of that growth. That longer runway for growth is one reason Indian stocks may not be as pricey as they look, at 19 times next year's earnings. Jane notes that over the past decade, the MSCI India Index has trounced MSCI China Index in earnings growth, 160% to about 30% in local terms respectively. Indian stocks could take a near-term breather, but their growth prospects make them attractive over the long term. For the next year, India is expected to see earnings growth of 16%, compared with 15% in China, Jane says. India's market is dominated by oligopolistic companies, boasting strong balance sheets and high returns on equity and assets. That's a difference from China, where intense competition can quickly change sector leaders. Given India's rapid growth, Mobius favours looking at return on capital and return on assets rather than price/earnings multiples. He also prefers companies that have little to no debt and that generate earnings growth of 10% plus. That turns up opportunities among mid-sized companies, Mobius says, including software companies positioned for the next phase of India's growth, such as Persistent Systems and APL Apollo Tubes, which makes tubing used in construction. Financials are also a way to tap India's improving outlook. Jane likes HDFC Bank, a well-run leading private bank. A lot has happened in the past 20 years, and still HDFC Bank is cheaper than 10 to 20 years ago because of its earnings growth. Jain says. For investors looking for a broad-based way to invest in India, exchange-traded funds such as the $5.8 billion iShares MSCI India ETF and $1 billion Wisdom Tree India Earnings ETF offer low-cost exposure. Investors looking to get the best picks of India investing veterans can find actively managed funds such as the all-cap $592 million Matthews India, which averaged 10.9% returns annually over the past decade, and $512 million Wasatch Emerging India. Piyush Mittal, portfolio manager of Matthews India, favours smaller companies to benefit from structural shifts in the economy. Holdings include beneficiaries of the push to diversify supply chains away from China, including Syngene International and Newland Laboratories. Both companies help drug makers get their products closer to commercialization. The Wasatch Fund's 13.7% average annual return over the past decade has beaten 99% of its peers, according to Morningstar. Krishnan favours financials including Cholamandalam Financial Holdings, which started as a commercial vehicle lender and is moving into mortgages, and Bajaj Finance. Krishnan also has been favouring companies positioned for India's manufacturing boom, like CG Power and Industrial Solutions, which sells motors and power equipment. For those looking for a broader-based emerging markets fund, the $13.5 billion GQG Partners Emerging Markets Equity has a third of its holdings in India, more than double its peers. Over the past 5 years, the fund, run by Jain, has averaged an annual return of 5.4%, beating 91% of its peers. India is bound to get more attention, yet to be seen is whether it will live up to expectations this time. We sincerely appreciate your viewership. Subscribing to our channel greatly supports our endeavours, and we eagerly welcome your valuable input. Kindly share any video ideas you may have in the comment section, as our aim remains steadfast: to deliver exceptional content on investments, economics, and business. Your engagement fuels our commitment to excellence.